All right, let's get stock specific again and investment strategy. Our next guest seeing rotation opportunities given the significant divergence in price movements across sectors over the past quarter. Of course, then we have had the movements just in the past couple of days. For his tips, Marcus Bogdan joining us from Blackmore Capital. Marcus, great to see you. All right, given what's happened over the past couple of days, are you altering your outlook at any stage right now?
Well, I think we're looking at the banking sector, which you've pointed out, has had a very strong rally compared relative to the market. And we think that a lot of that is now priced in terms of expectations of rising interest rates and the benefit that that could have on the underlying margins. We do expect to see a slowdown in overall lending growth, still the pressure there on expenses and greater competition around the mortgage market. And I think the benefits of the rate rises has now been really reflected in those banking prices, particularly if you look at CBA, NAB and Westpac. And we feel that at this time it's better to start trimming those benefits that we've seen in recent weeks.
All right, but you still liking Macquarie?
Yeah, so Macquarie is a different beast, and we do like Macquarie in the sense of its longer term structural position in terms of its position in terms of green infrastructure, and will be a global leader in that area. And so we believe that's a very strong thematic, and hence we want to be still well positioned in Macquarie. And the other side of Macquarie is that they've got a very large commodities trading business, and we believe that they will be benefiting what we're seeing in the volatility in the underlying commodities and energy markets as well.
Yeah, it has a strength certainly in its diversification, and that's also the case with WestFarmers. What are you seeing there?
So we are looking at consumer staples, and like many parts of the market, you're seeing a bifurcation in prices. So for supermarkets and Coles and Woolworths, there's been a very strong recovery there in price, and also in Endeavour drinks. But Westfarmers has been a laggard, and its price is actually well down over the quarter, whilst those other staples are quite higher. We believe that the underlying franchise in Westfarmers is sound, particularly the Bunnings business, which is the great bulk of Westfarmers' earnings. And so it does warrant to start to look at this, as it's underperformed the market quite significantly.
All right. Have you, those Coles numbers are out this morning. Do you have a chance to have a look at them?
Just a quick look, and the numbers look strong, both in terms of like-for-like sales looks above consensus, and also strength in the supermarket business and strength in the liquor business as well. And underlying inflation there looks like to be tracking at around 3%. So net, a very good result from Coles.
Marcus, I know you always have a defensive position with healthcare. How are you playing that at the moment? Of course, we've got Ramsay in play.
So, our overweight in healthcare has been a sort of a long-term position that we've had, particularly as we've started to come out of the pandemic. The Ramsay, the bid, I think, is opportunistic, given that the earnings have been so depressed for over two years, and it is a recovery play, a reopening play. And I think KKR have been very careful in the way that they've structured this bid in terms of getting Hester and other groups there in the consortium, and also getting the Ramsay Foundation to agree to the bid. So we think that at $88 is an attractive price for Ramsay, and then more broadly, we still like the healthcare names because we still think that they are at the foothills of a recovery there in demand.